Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everybody, welcome back to the Real Estate Pros podcast. Today I have Jerry Sanders, and Jerry is a serial entrepreneur, decades in real estate, more than a full cycle, and he's going to be talking about something very specific, very interesting: the distressed mortgage debt, non-performing second liens. I really want to get into that. But first, Jerry, tell us all how you got into real estate, decades in real estate. How did you get in?
Um, it was just a happenstance thing. Had an opportunity to buy some seller financed properties that were student housing. I didn't know any better. Had a chance to, I picked up, maybe half a dozen properties at one time. And because it was seller financing, didn't have to go to the bank. And that's what got me started.
What year was this? What year are we talking here?
Do you really want to know?
I really want to know. I'm 30, but I want to know. I got to know.
Right. So it was 1986.
1986.
Yes.
God bless. And so you were working in corporate America at that time and doing this on the side, basically. And you bought multiple at once.
Yeah. I didn't know any
Okay.
better. When you jump into something, and I'm one of those people that if I see an opportunity, I just jump in.
Yeah.
Because that's the only way you're going to learn. And I learned that you don't do student housing.
So for people who are getting into it, and of course this is before we have all the information, mass media, the internet, right?
Mm-hmm.
For people that are getting into it, you say it was very difficult to go jump into student housing, but you made that jump while being in corporate America.
Yeah.
There's, even if it wasn't, and I'm curious how that deal went. It sounds like maybe not the best, but
Yeah.
even though you had the courage to go out and do that, you found the time, you educated yourself. What tools were available then, and how did that process look?
It's hard to explain ancient times. The tool that was available, you had newspapers. That was it. You go through a newspaper, you go through legal news, stuff like that. That's how you find the deals. And that particular transaction, actually, it wasn't a bad transaction.
Mm-hmm.
The problem is, all of us were college students once, and it was karma. All of those things that I did came back to haunt me as a landlord.
Oh no! So it was I can only imagine. I didn't ask you this before we started, but in corporate America, what were you doing? Do you want to talk about that a little bit? And
Yeah.
yeah, tell us.
I ran businesses for Fortune 50 companies. So global businesses. It was we had stuff in Europe, South America, Asia. So I was all over the place.
Was it difficult, or was it maybe even, I don't want to say frowned upon, but was it challenging to do a big real estate? It sounds like a big real estate deal for your first deal while
Yeah.
also doing corporate America.
Well, I didn't know any better. You know? It worked out.
It did work out.
It just so happened that the properties we bought were in an area where I went to undergrad,
Hmm.
and had lots of friends, lots of connections in that area, and I was able to, do it remotely. Not as remotely as you can do it today with just calling people on a cell phone, but had enough contacts there that if I had a toilet that needed to be fixed, you can call this guy. That kind of.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
That's the thing, because I think a lot of people, and I go to a lot of events here in DFW, and I am asking people, hey, if I want to go move to the Dominican Republic, which is my dream, I would love to move.
Yeah.
Do I have to be in DFW to manage these properties? And some people, I get mixed answers. Some people are
Mhm.
like, it's honestly hard. It's hard, but if you have the right people in place, you can do flips and not be there.
Yeah.
And then I have other people tell me you should probably be there. But in your first deal, you were able to do it remotely. And so to
Yeah.
everybody who's looking at their first deals, it's really about finding the people in place. Would you agree?
Yeah, I agree. I agree. And the only reason we ultimately sold those properties wasn't because it was remote. It was because I started doing international. And then the time zones became an issue.
Mm.
So, you're 12 hours ahead or 12 hours behind, and you just can't manage stuff like that.
Wow. Was this international for your corporate job?
Yeah. Yeah.
Yeah.
Yeah.
I'm familiar with that.
Yeah.
My father worked for a Japanese company, and so the jet lag was wild.
Yeah. 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 You understand, when
I
I was
do.
here in the States, I remember, I get home at 8 o'clock at night and it's Singapore calling.
Yeah,
Yeah. Yeah.
that can be challenging. Do you love to travel? I would imagine
I
maybe
do.
yes, maybe
I do.
okay.
I do. Yeah.
I got the travel bug, and I sometimes tell people that if you're not sure which direction you want to go in, sometimes just travel, and you're like, man, that's all I needed to do. I just needed to clear my head for like half of a week.
Yeah. Yeah. It works. It
It
definitely
really
works.
does.
Yeah.
So after this first deal,
Mhm.
we're mid '80s here.
Mhm.
I'm gonna catch us up, not all the way to current day, but tell us about your next couple of deals. Tell us
Okay.
how you educated yourself, what mentorship you sought out, if any.
Mhm.
And then I guess a follow up to that is, what advice do you have for people who are in that growth process?
Yeah. After that first deal, I started buying other properties not too far from that group of places. I'd look for tax sales, which were really prevalent. You can find some really sweet deals going through tax auctions. So that was kind of a real cheap place to find properties, uh,
Hmm.
and kind of built the portfolio up from there.
When you would go to the tax auctions, were you going in person?
No, you can do it remotely.
I know
Even,
that's a big deal now. The
yeah,
remote, I think it's auction. I'm not going to plug them, but everybody knows them. And
yeah,
I love going in person. I've been in person now many times, and the people that you meet, but certainly doing it remote is fantastic.
yeah,
Okay, so we had the student housing while being in corporate America,
yeah,
then did auctions.
yeah,
And then catching us up to current day, and something I'm really interested in talking about is, you mentioned before we hopped on that you're in the distressed mortgage debt space and
yeah,
even non-performing second liens.
yeah.
Tell us about that.
Well, just like jumping into student housing, I jumped into mortgage notes. And the reason was that as a landlord or and a real estate investor, you realize that your largest single expense is the bank. They're your lender. And, while you may be with real estate as a landlord, you're looking for two, three, four, five, $600 a door, and you do all the work, and the bank gets $1,000 a door or more, and they do nothing.
Yeah.
So it's like, well, I like their space better than my space. So that's how I kind of stumbled into mortgages or into mortgage notes. I did a bunch of, with some of the properties I had, I did seller financing, which was kind of opening the door to being able to do financing and to understand what does it take to be in that space. And that's what got me going and got me focused on it. The reason for the non-performing was that they were cheap,
Hmm.
and non-performing seconds are even cheaper.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So you could invest a little bit of money, not be worried about losing your capital. Because let's say if I screwed up and I lost everything, I only lost a few $1,000s.
Yep.
But that's a cheap way to learn.
This is
And,
true.
as you're learning, you get really good at it. You learn more the techniques, the skills, you learn the legal processes, all this other kind of stuff. And that just helps you enhance your ability to do what we do. And it just grew. It blew up from there.
Amazing. Now,
Yeah.
for our listeners, our avatar of this Real Estate Pros podcast is really a high level investor.
Mhm.
Typically, we have folks who are doing 50 plus deals, but to the folks who are not at that level, and maybe you're just getting in, help us break down some of this here. So, distressed mortgage debt. This is someone who's delinquent, right?
Yep. Yep. Um, you know, it's delinquent after 90 days. So not making a payment after 90 days, you fall into default.
And then a non-performing second lien. I told you before the call, when I heard this, I said, wow, that is very, very niche. Very niche. Because I know you've got your taxes, you've
Yeah.
got your mortgage, and
Yeah.
then everything else. And so break that down for us, break some of those terms down for us, and then also, how'd you come up with that idea?
Yeah. So non-performing, obviously, they're not making their payments. Second liens are HELOCs, home equity
Mm.
lines of credit. So somewhere along the line, somebody took out a home equity loan and they're not paying it. In order to be able to get a home equity loan, you have to have equity in your property. And typically the banks won't lend you 100%. So there's still a bunch of equity on top of you.
Okay. So this might be somebody who took out their HELOC because maybe they needed money,
Yeah.
and then are defaulting on that.
Yeah.
And so, correct me if I'm wrong, these people are going to lose their home, right?
So it's a little bit more nuanced than that. They
Okay.
could lose their home. Typically, the notes I buy, they're paying their first every month. So they're current on their first. But
Wow.
yeah, yeah. So yeah, I'm really, really niche, Dylan. So they're current on their first, they're not paying the second. Now then,
Okay.
back to you can lose your home. This is the thing that's kind of crazy. If you have a lien on your house, you have pledged your house to say that if I don't make the payments on this loan, you can have my house. That applies to the first, second, third, how many ever mortgages you have. So if you're paying the other mortgages and you're not paying this one, yes, it is possible for me to foreclose and take your house.
Okay. Now, man, I almost feel like you're giving us so much game. We should be paying you, but uh,
Well,
I, I
Dylan.
I don't want you to give away all the game, but Let me ask a couple follow-up questions here.
Mhm.
Um, for these folks who are not performing on this HELOC,
Mhm.
they might not lose their home, right?
I hope
So
they don't.
when you're reaching out to them, their level of concern is obviously not as great as someone who's headed to the foreclosure auction next Tuesday, but they're acutely aware that they're behind. And I'm assuming it's probably not just this, because your home is the thing that you want to be paying. It's probably a bunch of other things in that situation. So when you're opening up these calls, first, is it you making these calls? And then also, what's that process like?
Okay. So sometimes I'll make a call. Sometimes someone else on my team will make a call. When I first started, obviously I was making all the calls. Then you call someone up and it's like, hey, what you start with? Well, what happened? And generally, I always like to say bad things happen to good people. So somewhere along the line, something happened. You got a HELOC, which meant that your credit was good. You have a house, so you have equity. So it's not like just something happened. There may have been a death in the family. You lost a job, medical situation. All those kinds of things can cause someone not to be paying that note. And when I call up, that's the first thing we want to know: what happened? And then once we know that, then let's kind of work out a plan. Obviously, because you have pledged your house, there's always that issue of the foreclosure. But my goal is not to try to foreclose and take your house. My goal is to try to come up with a solution to help you get back, get back
Hmm.
on your feet, doing whatever it takes. So because I buy the notes at a discount, I can do a loan mod, I can change the payments, I can change the interest rate, I can change the term, I can do anything I want to do.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Jerry, is there a market for these non-performing notes, or are you having to go to public record and then go to the lender and say, "Hey, I'm interested in buying"?
All right, so Dylan, this is where you have to pay me.
Okay, for our
So
listeners, we don't have to go too far into
yeah,
this.
you get them from banks.
Okay,
Basically you get them from banks.
okay.
And we have a pretty long list of banks that we deal with, credit unions, hedge funds, and so on. That's where we buy the notes.
This is interesting. So my goal one day, Jerry, is to be on your level, living out in Florida. I love Florida. I really love Florida. I just told before we got on the call,
Yeah.
I said I was in Fort Lauderdale, and it was the first time being in Fort Lauderdale, and I said, this is so nice. This is the nicest place. Someone can tell me that there's nicer places in the United States, but I might not believe them based off my uh 2 nights in Fort Lauderdale. But um for people who are growing as you've grown from your first deal to now something very, very niche,
Mhm.
uh I think what a lot of people struggle with, which it seems you do a very good job with, is building out the systems in place to allow you, to be able to, like you did when you were doing this, to
Mhm.
have a job and do that, so you're not having to be right on top of it.
Mhm.
But then also, when God willing, you make it your full time profession, really, either retirement or you just decide, hey, I'm going to jump into this and this is going to be my full time deal.
Mhm.
What was the growing pains, and how did your systems evolve, and where are they at today?
Okay. So I do this full time. And, we have a team, a company, and most of the folks on my team are doing this full time. So to make the adjustment, we started with a couple of notes and, started learning the processes. What does it take? How many calls? What do you have to say to people? That kind of stuff. And then we kept buying. And as we bought, we were buying bigger and bigger lots of notes until the point where, you got to do this full time because you just have so many notes.
Mm.
And as you're doing that, as you go through stages, you have to put different types of processes in place. The more notes you have, the more processes and more gates and guardrails you have to put in place to make sure that you can get the returns you're looking for.
Wow.
So
You know,
that's what we've done.
most of the and we've just been running this real estate podcast full fledged for the last 3 weeks, and I'm one of the newer people hosting. But
Yeah.
um, most of our guests on the show uh, have a strategy which predominantly revolves around some level of short term or wholesaling, and then potentially larger going up to commercial. But this specific niche that you've carved out with uh, note buying and then the second position, I haven't heard this one before. Was this based on your background where you came up with this, and then ultimately where you've mentioned it just scaled to a point where you had to go and everyone had to go full time? Or was this something where you were doing other deals and you saw, no one's doing this, I can come in and make this happen? Or was it based on your background?
Okay. So one of the things that I was involved with before doing this, I was a trustee on a public pension plan. Yeah, I got appointed as a trustee. And there I found out that one of our better returning equity class or asset classes was debt. And, prior to that, I got an MBA, it was in finance. So I thought equities were the way to go. I found out debt was really, there you can make a lot more money with debt. And as you've heard me say, we're buying these things at pennies on a dollar. So you can, you're definitely you're buying dollars for pennies. As I started studying that, I got introduced to a woman that was doing non-performing seconds. And, I had that same aha moment that you did a few minutes ago. It's like, well, wait a second. What do you mean? How can you do that? And just kept digging and digging and digging. So learned everything I could learn from her, started talking to other people, learned from them. And, at the same time, buying notes and then comparing, you know, my learnings and my experience with other folks that were in the space to start building up the knowledge base to be able to do this.
I had a similar experience, not with this specifically, but with really getting here. And I mentioned this before the show that I ended up getting up to DFW because of a connection that I had made. And
Hmm.
ultimately, that's how I ended up hosting this podcast. And I like the term fanatical networking. There's another one too, it'll come to me. But this idea of just you're constantly looking for the next connection, which could get you that $1 million idea or something that no one is doing or doing at that level.
Yep.
For instance, in Texas, if you could have been wholesaling the way everyone is popularized right now 10, 15 years ago, there wasn't as many people doing it,
Right.
you know? And
Yeah.
I hope part of me doesn't want this podcast to get super big because then everyone's going to be doing second position liens in Florida. But I actually think that that's probably a high level of difficulty, so I don't think it'll be too bad for you out there, Jerry. But um it to people who have let's say that corporate job and they're trying to understand, well, what do I do to get myself in the room with these people? I'm highly educated, but I don't necessarily know anything about real estate. I don't have real estate investors in my family. You mentioned, going back to your backstory, that you really just jumped in. But now we've got so many tools out there. Um,
Yeah.
my perspective is it's great to jump in, but also to do it with someone who's seasoned. You might not make money on your first deal, but you might. And
Mm-hmm.
either way, that's a learning experience. Is that more or less what you would recommend to folks as far as getting in?
I agree. I totally agree with that. You can study it forever, but you really won't know the nuances until you jump in, because no matter what you study, everything that we do is not going to be written down. So you have to just start, and also every situation is going to be different. When with our notes, yeah, you can sit back and say there's kind of a broad process that we have, and that there is you know a methodology behind it, but every borrower is different, and every borrower is going to react differently. For us, when we buy a note, we have an exit strategy. Just like with any other thing in real estate, you make your money on the buy and you collect it on the sell. So when we buy a note, we are buying it with an exit strategy and a potential profit that we're going to get. And I
Hmm.
can game it out as much as you want, but when I make that call to the borrower, that's going to determine what really happens. And there are a lot of times when you buy a note and you go, this is a slam dunk. I know when I call them, they got so much equity, they got a great credit score, great job, all this other kind of stuff. They're just going to pay me off. Nope. and and then there are other times when you look at it and you go, well, gee, this person's going to struggle. I know right up front they're going to struggle, so I got to, kind of massage this. You call them up, and where do I send the check?
Hmm.
Or other borrowers that have called up and they've said, hey, I know, you got the letter in the mail today, and we knew we were behind. We've been trying to find somebody to call, and you're the first person that ever picked up the phone. Where do I send a check?
Hmm.
It it it. I'm flexible enough to be able to handle all of those kind of situations.
So in these deals,
Mhm.
the really the two sides of it, and tell me if there's additional, is the lender or whoever the HELOC is with, and then the distressed seller, and it's a separate process for both of those. You have to not an It doesn't sound like a deal where the average, certainly not a newcomer, could just go hop on the phone with the lender, but then also you have to have the kind of agility to get on the phone with the sellers who are in various different states,
Mhm.
and you or your team has to make it a win-win for everybody. Is that more or less,
Yeah,
tell me.
yeah. So it has to be a win. So we buy notes from banks all over the country. And, so why do they sell them to us? Because they're getting rid of their junk. They want to have money, they want cash to go do real loans that are going to pay them off. So they sell them to us. Now I'm buying the loans they're from all over the country. And I'm trying to work with the seller or with a borrower to come up with a solution so that they can financially pay off this debt.
Hmm. Are there I know for wholesaling, which is the stage that I'm at now, there's a lot of regulations that are popping up all over the country related to this. So, for
Yeah.
instance, Texas is one of those places, and I believe Florida as well, though I'm not a resident there. But Texas is one of those places where, in a lot of ways, it's still rather no, I don't want to say easy, but you can still be a wholesaler. In
Mhm.
other places, you really can't. But you're all over the country, and you're doing this. Did you start just in your area out there in Florida, or when you started out, was it all over the country as well because you were doing it remote?
Yeah, it's kind of crazy. I think we got our first mortgage or most first note in Florida like last year, maybe last summer. you know, um, Most of the stuff I've bought was other parts of the country, the Midwest, Mid-Atlantic, um, you know, Southwest, Southeast. I never bought in Florida,
Hmm.
and it was just I had better relationships with banks in other parts of the country.
Are there specific states which, uh, being it's not quite like anything else that I'm familiar with, but are there specific states where it's more challenging to do this than others, or is it really based off your relationship with these banks?
I don't buy loans in New York, California, New Jersey, and Massachusetts.
Uh, the same as everybody else.
Yeah, yeah. And it's not that you can't do them and do well. I have lots of friends that buy California exclusively. I have other
Mm.
friends that buy New York exclusively. And it's just that you have to have a different process and it's a longer process.
It's a longer process, yeah. Because
And
if you have to acquire it, if that is what ends up happening, then the foreclosure process, if you go down that route, is going to take a much longer period of time. My parents currently live in New Jersey. I've lived in Boston before, and we grew up 27 miles from Manhattan, so I know for sure. And it is interesting because on that note, I feel like there's more, and I could be wrong, but just from the vibe I get, that there's actually more people as real estate investors who are getting into it in places like Texas and Florida than there are in those states. And I could be wrong,
Mhm.
but what's your feeling on that? Like, are there more like entry level real estate investors in these places where it's a little bit more free on that sense, or is it like, well, you just have to go out and meet them because there's tons of real estate investors everywhere
You mean it in the note space?
in the note space, and then also I don't know if you still have connections elsewhere, but
Yeah.
yeah, in both
Yeah.
spaces.
So in the note space, first of all, it is a small universe. And I know the folks that are in those niches because that's just what they have that's what they do. It's not a lot of folks, um, and it takes a level of expertise that most people don't want to spend the time learning. So
Yeah.
can you get into it? You can get into it no matter where you are. It's just, do you want to spend the time to learn how to do it?
We've talked about a lot today. We're coming up on time here, but
Yeah,
we've talked about the note space, second position, how you got into real estate while working a corporate job, traveling, hours ahead, a
yeah.
tremendous journey. Jerry, if people want to get a hold of you, how can they get a hold of you? And is there anything else that you want to leave our audience?
Sure. So to get a hold of me, you can reach out to me, Jerry, at firstshieldfinancial.com, or actually oneshieldfinancial.com. Um, Go to our website, firstshieldfinancial.com, and you can learn more about us. Two things that are coming up with us. One, we started a fund for accredited investors. We're in the process of raising funds for that because we see a tremendous number of notes out there, and the fund will allow us to buy more. We also have a summit coming up, and hopefully this will broadcast before the summit happens, but it's going to be here in Jacksonville, Florida, April the 5th. We're going to be talking to a number of investors and also a number of folks with deals on looking at how to build your legacy and how to create long-term wealth for your family.
If people want to go to the summit, how do they go to the summit?
Go to our website, www.firstshieldfinancial.com, and it'll take you right to the summit, right to the registration. It's going to be at the Sawgrass Marriott, which is a beautiful facility, half a mile from the ocean.
Well, folks, we hope we gave you a lot of value. Thank you for tuning in, and we'll see you next time on the Real Estate Pros podcast. Thank you, Jerry.
All right, thanks, Dylan. Appreciate it.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.